and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a day which is where we are seeing follow-on buying from yesterday's rally. So that's definitely a good thing. We have the mid-cap index, which is holding with a gain of around 0.8%. We have an advanced decline ratio, which has been positive through the trading session as well. Lot of queries in what is quite a choppy market on a net basis, and as we move towards the election outcome on the 4th of June. Joining us today, we have Shahina Mukadam, independent market expert, to take all of your fundamental questions. Vaishali, Parekh, head of tech research at Prabhudas Lilladher, to answer all of your tech questions. Afternoon, ladies. Well, Vaishali, I'm going to start with you. Hygiene check on the markets. It's looking good. Where do you expect the Nifty to go, and your call on the broader markets as well?
Very good afternoon, ladies. Yes, so it is a good surprise. I mean, yesterday we saw a lot of volatility in the market, but we closed very well, and today also the momentum continues. So for this week, of course, we were waiting for 22,350 to be crossed, and now we are looking forward to the next target of 22,600. So view is a positive buy on every decline. Likewise, even Bank Nifty, after a very long time, we saw a move past 48,000. So that implies there is going to be good participation from the frontline banking stocks, and we would be now looking at 48,500.
Okay, all right. Well, let's get in some queries now. We have Ashwin Kimani, who writes to us from Mumbai, who's 2,000 shares of PNB, which is bought at 35. He's a long-term investor and wants to know what to do, whether he should hold or sell at these current levels. So he's a long-term investor. He's bought the stock at a good price. Shahina, let's go to you on this one first. 35 rupees is the buy price. What would you recommend? Do you expect further upside or maybe some profit taking?
He can continue to hold. Basically, valuations are not expensive, with a price to book 1 year forward just about one time. And the results also, fourth quarter numbers, were largely in line. And I expect FY 25, FY 26 to continue to do well in terms of, lower provisions, better margins. So one can continue to hold.
Okay, continue to hold. What about you, Vaishali? Done very well from the buy price. What would you recommend?
So, well, we saw a bit of a dip right now. I would say keep a stop loss of 115. But I think it's the way we are looking at the market, it's ready for further price projection up to 140, 145. So my view also remains that, yes, hold with a stop loss of 115.
Okay, the view is hold on PNB. That stock, as you can see, is rallied around 155% in the past 12 months. Well, we have one more query now. This too is on the financial space. Ashish Thakkar writes to us from Mysore, holds 2,000 shares of IDFC First Bank, which is bought at around 40 odd rupees. He wants to know what to do, whether he should stay invested or sell his holdings. Sitting on a profit at this point in time. Vaishali, you go first on this one.
Well, so IDFC First has really not participated, but only hope is that technically very well placed. 75 is the level where double bottom formation is taking place. So I would say hold, because once the stock picks up momentum, the first target we would look at is 82 to 88. Above that, there would be a confirmation of further high. So for now, it's a hold.
Okay, and what about the fundamentals on IDFC First Bank?
The stock was consolidating and likely to consolidate a bit because fourth quarter numbers were a bit subdued. Having said that, I think the NI growth was pretty strong at 24%. And I believe that, going forward, they have guided better second half of the current year rather than the first half. So you could see some bit of consolidation. But here again, the price to book is very attractive. It's just about 1.7 times. The book is improving. So might as well just hold it.
Okay, well, a very good reaction coming into the GSK numbers, where the stock, I think, is up in around 8 odd percent. If I'm not mistaken, GSK Pharma, that stock should come up for you. It's been a good revenue growth of around 18 odd percent, which has come through for GSK, almost 10% move on the stock. And you generally don't see that for an MNC post its numbers, because the numbers are generally tend to be quite subdued. But this has been a very good quarter for them. Net profit up around 46 odd percent. They have their revenue growth, which is around 18% and the EBITDA, which has grown in double digits as well. I think it's around a 50% growth. Margins have expanded all the way to 27%. So very good going for GSK Pharma. As you can see, that stock is spiked up to a gain of over 10% at this point. Well, Shahina, would you have a view on GSK Pharma?
I have not looked at the numbers lately, so I would let this pass. But I think being an MNC, they always attract higher valuations. But somehow now I think the focus is shifted for quite some years now to domestic companies. So I'll just let this pass.
Okay, all right, fair enough. And Vaishali, any call on the technicals for GSK?
Definitely. So actually the long-term trend is very good. Even on a technical level, currently, we have just seen a very strong bullish candle with very high volume, but we need a follow-up buying in days to come. So I would say this, yes, with the support of 2000, the stock is ready to do 2500, and above that, I think 2800 levels are also open. So it's a bullish view, but to be bought in decline because support is quite far, 2000 levels.
Okay, all right. Well, there's a one-time gain, but it's marginal as compared to the kind of growth that you've seen in terms of the overall numbers this time. But now we do have Sasikala Chidambaram, who writes to us from Chennai. She holds 500 shares of Bandhan Bank, which she's bought at around 409 rupees, so sitting on a loss there, and 10 shares of Whirlpool, which she's bought at around 1,000 odd rupees. She wants to know the future prospects of both these counters. Whirlpool sitting on a profit and Bandhan Bank sitting on a loss. In fact, Bandhan Bank comes out with its numbers today as well. You go first, Vaishali, on the technicals of both these stocks, Bandhan Bank and Whirlpool.
So Bandhan Bank continues to show a weak trend, and I think, well, if she's holding, keep a stop loss of around 170 levels, because she's held on for quite some time, and might as well wait till 170, because the way the chartical formation is, there is no pickup. The confirmation of a reversal comes only about 190 to 193. So this is how she should be holding. Keep holding with the stop loss of 170. And if there is a move above 190, she can probably add more to average out the price. That would be my view for Bandhan.
Okay, all right. So that's your view for Bandhan Bank. And what about you, Shahina, on both these stocks, Bandhan as well as Whirlpool, fundamentally, how would you be placed? And Bandhan comes out with its numbers today.
Yeah, I think they have given us an indication that both their advances as well as the deposit growth has been pretty strong for the quarter. So I think numbers should be okay. And also management, there seems to be some, I think going forward, some stability that will come in. At the same time, I believe the stock has not really performed, and it is likely to, continue to underperform in the overall banking space. So I would prefer that one switches from Bandhan Bank. There's something like a federal bank which looks more interesting. In terms of Whirlpool, again, there I would suggest a switch. That has again been a non-performer for quite a few years. And if you see both in terms of financials as well as stock performance, and if you look at valuations and compare it with a peer group, like let us take, for example, IFB. IFB is much cheaper than Whirlpool. And in terms of the way they have managed, the current slowdown, IFB has done it better than Whirlpool. In terms of valuations also, I think Whirlpool is expensive. So it would be better to switch.
Okay, all right. Better to switch from Whirlpool. That's the view coming in. The next query is on Diani International. Jatin Shah writes to us from Gujarat, holds 130 shares of the stock, which he's bought at 187. So he's sitting on a loss right now, and he wants to know what to do, whether to stay invested or book his losses at this point. Well, Vaishali, the 52-week high is over 220 odd rupees. So that seems to be a way off. Do you recommend staying on or maybe booking his losses and moving out?
I would say better to switch, because it's all wishful thinking only, unless and until if the stock moves above 169, 170. So if he's ready to hold on and see the reversal, that's okay. But for now, in the current scenario, it's a weak trend. I would say give it a miss and switch to a stronger stock.
Okay, well, what would you recommend on Devyani? This KFC operator did report what was a net loss this time. What would you recommend Shahina, on Devyani?
There again, I would also agree, and I would recommend a switch. In fact, from the overall sector looks very expensive. Though Devyani is the cheapest of the lot, and this quarter loss was more because of they acquired the Thailand the franchise. But at the same time, if you even if you normalize it, the overall sector has not really done well, including Devyani. If you saw the numbers, they've shown a decline on the same store sales. And both in both their segments, you have Pizza Hut also that showed a decline. So I think to an extent, and valuation is extremely expensive. So the market is not going to reward in such a volatile scenario. So I would suggest, better to switch to some other sector for now. Of course, you can relook at it maybe 2 quarters down the line.
Okay, all right. Well, on that note, we'll take a quick break, but lots more queries on the other side, China as well as Vaishali. Stay tuned. We'll be back in just a jiffy. Welcome back. Well, definitely a lively market when it comes to a lot of, result reactions. Like we pointed out, GSK reacted very strongly to its numbers, and now we have GPT infra projects where the margins have expanded and that stock is up around 5% post numbers. Maybe the other one which should come up for you is Poly Medicure also. So let's see how Poly Medicure is reacting to its numbers. It just came out maybe a couple of minutes ago. So that is basically a medical device manufacturer, just about flat post its release of Q4 numbers. But nonetheless, we do have a lot more queries lined up. So let's get to that. We have Rahul Taneja, who writes to us from Kanpur, holds 20 shares of State Bank of India, which is bought at around 190 odd rupees. He wants to know what to do with this particular counter, sitting on a good profit there. Do you think there's further upside on SBI, Shahina, post the Q4 numbers? One, what are you expecting in FY25? And two, any upside?
Yeah, the numbers were very healthy, much better than what, in fact, the street had expected. And I think in terms of valuation, there again, State Bank, despite its size, it's pretty attractive. If you look at it on a one-year forward basis, as you asked, FY26, it's just about 1.4. If you include all the subsidiaries, the valuation of the subsidiaries. I think it's a bank that will do well over the longer term. So one definitely needs to be continue to be invested in State Bank.
Okay, all right. So in the past 1 year, that stock has rallied significantly, but it was an underperformer last year. What about you, Vaishali? What would your recommendation be on SBI? How does it stack up as compared to the others?
So I would say, of course, the leader of the PSU and doing very well. Technically, I would say 790, 780 acts as a support. In fact, I would rather say keep adding in decline, because once we see the stock moving above 835 levels, I think this is ready for a target of 880 to 900. So it's a buy at every dip, 780 as support.
Okay, all right. So it's a buy at every dip, and your targets are over 850 odd rupees. Well, Amandeep Singh writes to us from Amritsar. He holds 150 shares of Happiest Minds at an average of around 1050 odd. So he's sitting on a loss there since the past 2 years. He wants to know whether he can hold these shares for the next 1 to 2 years. Well, interesting question there, because generally, Shahina, we get a lot of queries that somebody's held on and they've made profit in what has been such an exuberant market. But in this case, the person's been holding on patiently, hoping for that upside to come through for Happiest Minds, but it hasn't. So what would you recommend in that case? Would you ask, for an exit, or maybe even build on these levels, considering that you're bullish on the fundamentals?
I would recommend a switch, because, while the stock has underperformed, if you look at the last couple of quarters, I expect this likely to continue, or at least it will underperform some of the other, IT stocks in the peer group. Like, for example, if you look at pure valuations, the fourth quarter numbers were pretty disappointing. And based on those numbers, if you really look, even 1 year forward, it's about 32 times 1 year forward P. Also, if you look at it from the turnover to market cap basis, there again, if you compare it to, say, a peer group, like, for example, Birla Soft, Birla Soft is much cheaper than Happiest Minds. They are similar market caps. So I would suggest, it is better to switch from Happiest Minds to something like a Birla Soft. So you'll make better money, because I don't see too much downside from the stock price for Happiest Minds, but I don't see too much of upside also. So I think it is better to switch.
Okay, all right. And what about you, Vaishali? What would your view be on the technicals of the stock?
So I think it is gradually now getting into a trend. And I think currently it has just been consolidating. So with 780 as support, not in a hurry, I think this stock can take off and may retest the previous levels that he has bought. I think 1,000 levels you said. So I would say hold for some time. You'll get your price, and then perhaps you can switch over to the other stocks.
Okay. Rishabh Gupta writes to us from New Delhi. He holds 10 shares of IRDA, which he's bought at around 100 odd rupees, and wants to know what to do, whether he should hold, sell, or buy more shares of IREDA. The stock is doing well today. It's up around 2.6%. Rishabh's made a profit as well. Vaishali, you go first on this.
So I would say if he wants to buy, of course, statically, I don't have much of a data, but whatever I have, it shows a lot of trends. So 150 acts as a very prominent support. So buy at every decline with 150 as support, because the way the chartical formation is, it's quite likely that it will retest 200, 215 and perhaps go higher. So if it's 150 as a support, keep buying.
Okay, well, yes, absolutely. Listed in November 2023 and listed with a over 56% premium to its IPO price. So that's the kind of gains that we're talking about for that particular counter. Shahina, what would your view be?
Well, it's a strong PSU. At the same time, if you look at it in terms of the near term, let's say next 6 months, there are going to be issues. We'll have to look at the impact that the new norms that RBI has has put across for provisioning, how it is going to impact their balance sheet. While of course they say profits will not be impacted, but the balance sheet may be impacted. They may have to raise further funds, I don't know. So we'll have to wait and watch. Their net NPA is about 1%. So I think, one time. So I think it's better to not add as of now. You can wait, relook at it maybe a couple of months down the line.
Okay. Pooja Malik writes to us from Mumbai. She holds 20 shares of RVNL, which she wants to know what to do with, whether she should stay invested or exit at current levels. She's sitting on a profit at this point. Her buy price was 200 odd rupees. Let's go with you, Vaishali, on this one, RVNL.
I think it's doing very well. Most of the rail stocks are doing so well, and it's on the verge of a breakout. So about 295, I would say that this stock is ready for a target of 350. So continue holding. But yes, keep us trailing stop loss, since she's holding since a very long time. Continue holding with the trailing stop loss, but look for higher targets.
Okay, all right. And fundamentally, it's been doing well. For example, it just won an order from the Southern Railway just a couple of days ago, I think on the 13th of May. So fundamentally, it is in this upswing. What would you recommend in that context, Shahina?
Absolutely. I agree both with you, Ekta, as well as Vaishali. It is better to continue to hold. Railways accounts to about 50% of their revenues. And in fact, order book is very strong. They've already had an order book of about 65,000 before the orders that you're talking about. And they've got some additional, they're shortlisted. So order book is strong, and that is likely to, enable them to report good growth. We are seeing railway stocks doing pretty well. So it's better to continue to hold, for the medium to longer term.
Okay. All right. So that is basically on RVNL. We have another query now. We have Indrani, who writes to us from Kolkata, holds 100 shares of Home First Finance, which is bought at around 921. Wants to know what to do, whether she should hold the shares or book her losses and exit from this particular counter. Shahina, what's your view on this one?
It's a small cap housing finance company. I would suggest she exits from here. Basically, the valuations are expensive. It's about 2.5 times book. And we have RBI that has, again, now put in certain provisioning norms for housing companies. I think it is expensive. So it's better to exit.
Okay, all right. So that's on Home First Finance. What about you, Vaishali? Your view on it?
I would agree with China because there's nothing really happening. It's in a downtrend. There's no clarity. So better get into a better stock.
Okay, all right. Quickly, we have Shivani who writes to us from Pune. She holds 20 shares of Yes Bank. She's bought it at 30 rupees, asking for the prospects of this investment. China, you go on this.
Well, Yes Bank actually, in terms of valuations, it's now starting to get like it is expensive, but at the same time, there is a potential for M&A because we don't know exactly what SBI is going to do with its holding because some of the other large investors have sold part of their shares. So I would, and they're doing pretty well in terms of performance if you saw the fourth quarter numbers. So I would continue to hold and, wait and watch what happens.
Okay, all right, fair enough. Well, Vaishali as well as Shahina, well, that's all the time that we have on the show. You have a great weekend and we'll see you on back on Tuesday. That's because Monday it will be a holiday for the markets, but we do have trade tomorrow. Well, that's all the time that we have on the show, but do remember to email us your questions. We'll address them with our experts. Closing bell up next.